With global central banks printing trillions of dollars in new currency these days, those voices claiming that cash is trash, appear to have a pretty valid point. Banks give us no return on cash savings, and inflation is swiftly eating away at its purchasing power. So what's the future outlook for the world's major fiat currencies? And are there better stores of value we should consider instead of paper cash? We invited economic analyst Lyn Alden to answer those very questions for us at the recent Wealthion online conference held in early June. If you missed that conference, well, you're in luck, as we're making Lyn's excellent interview available to you right now.
Over time, we're moving more and more towards kind of a multipolar currency system where I don't think there's any one currency that comes in and displaces the dollar. I just think that the dollar goes down as a share of global reserves and as a share of, say, commodity payments, for example. And it could even still be the single biggest, but that it's just not, it doesn't have like a complete lock on those markets like it has for quite a while.
All right, I'm very excited for this next guest who a number of the Wealthion audience has asked to have on the program and to hear from. I'm talking, of course, about Lyn Alden. Lyn is an experienced investment researcher who applies her strong engineering background to the world of finance. And at her blog, lynalden.com, and through her many media appearances, Lyn provides tens of thousands of investors every month with research, information, and tools to help them build wealth and reach financial freedom. I'm so glad she arranged to join us for this conference. Lyn, thank you so much for joining.
Hey, I'm happy to be here. Thanks for having me.
You're welcome. And we got a little bit less time than we do on the normal programs, Lyn, so I'm just going to jump right into it if that's okay.
Sure.
Let's get into, I want to start by talking about the dollar with you. You've written a lot recently about the dollar as a U.S. dollar as a reserve currency. You've written about its role as the petrodollar. And I think you cover a lot of asset classes that people look into as either substitutes or a defense against a weakening dollar. So let's jump right in there. The dollar has been in a prolonged decline since the trillions in stimulus have been issued in response to the coronavirus pandemic. And interestingly, at this point, further weakness appears to be an expectation that pretty much nearly everybody on Wall Street seems to share today. Do you expect its decline to continue? Is this just a slam dunk bet?
Well, I think nothing's a slam dunk bet, but my base case is over the next 3 years or so to see continued dollar weakness from here. I do think that we're probably on the down leg of a significant, if you look at back at the last 50 years, we've had this giant kind of like 15-year gyration in terms of these big multi-year bull markets and then bear markets in the dollar. And I do think this is likely, most signs point to it being kind of the third major bear leg of that long-term cycle. But there are curveballs that can throw that off course for a couple quarters. And so as an example, I turned bearish on the dollar back in late 2019. It started to weaken, as planned. But then, of course, the coronavirus came around and all the different effects out there in the economy result in that shortage that push it up. And so it's one of those things where the lower probability event became kind of a temporary, that would actually happen until, of course, we got past that and then continued with the down leg of the dollar. And so overall, I do have a longer term outlook that is pretty negative for the dollar. But whenever it gets to consensus, that's when you get a bounce. And so, for example, when we went into this year 2021, that's when positioning was really negative on the dollar, and so we got that kind of 3-month bounce to clear out some of that consensus. And lately we've been going back down again, and really what I'm watching to see is if it breaks a couple of the key support levels, breaks the previous low that it set in the beginning of this year. Compared to a number of currency pairs, it already has for a few, and then next I'm watching to see if it breaks past the early 2018 bottom that it had against some other currencies.
All right, can you just give a quick summary then? So you said you went bearish on the dollar all before coronavirus hit the world. Can you just give a quick summation about why you predicted a lower dollar even before we had all these fresh trillions in stimulus?
Sure. Mainly, it's the combination of loose fiscal policy combined with loose monetary policy, and it's one of those. It's one of those things where there's a couple kind of nuances there that can be pretty tricky. And so, when you have pretty loose fiscal policy with tight monetary policy, that tends to be dollar bullish. And so, for example, in the early '80s, under Reagan, when he was running, pretty kind of larger fiscal deficits, but then you had Paul Volcker running pretty tight monetary policy. That was really bullish for the dollar. Same thing for the 2018 period, where we were running larger fiscal deficits in the United States compared to most other developed countries as a percentage of GDP. But we were doing quantitative tightening, we were hiking rates, and even though we were still dovish in the historical sense, we were tighter than most of our developed peers, and so that was a recipe for a pretty strong dollar. But when you have the combination of loose fiscal policy, meaning that the United States is running larger fiscal deficits than the rest of the developed world, and when you then shift from tight monetary policy to loose monetary policy, as we saw happen after the repo spike, that was my trigger to turn more dollar bearish in late 2019. That's the kind of the shift for that release valve to start going down and for the dollar to weaken. And then if you take an even further step back, because the United States runs these structural trade deficits, our natural tendency for the dollar is to weaken over time, but it gets held up by these really big kind of offshore U.S. debt cycles that happen, and that creates a lot of demand for it. And so we have these giant gyrations that are really based around the shifting monetary policy that's happening. And so that kind of sets like the big stage for why it happens. But then I have to kind of watch the quarter to quarter action to see if we're getting price confirmation and what other variables can cause kind of multi-quarter or multi-year deviations from that big structural trend.
Okay, yep. So you're seeing this big structural sort of secular trend, but you got to watch out for the cyclical patterns that can happen within it. Exactly. Let me ask you, where I'm kind of going to a couple places with these questions, this line of questioning, but one of them is, if the dollar just continues to weaken, right, it is the world's reserve currency that does give the U.S. an exorbitant privilege. And there are many people out there that are saying, look, don't take its continued weakness forever as a given. The United States is going to step in at some point and do whatever it can to protect that exorbitant privilege. What do you say to people that make statements like that?
Well, I think it's so taking a step back. I think it's when this current dollar structure was put into place in the 70s, that did give the United States a pretty exorbitant privilege. But over time, basically the benefits were pretty static, meaning we got a continued benefit from that. But the downside from that, the cost of that system kept growing and growing and growing, mainly in the form of a structural trade deficit, which really materialized because of the structure of this current system, the petrodollar system.
Right. And I'm sorry to interrupt, but isn't that even sort of what Triffin's paradox says, that if you're the reserve currency, by definition, you have to run a trade deficit?
Well, in a way. So there's a couple different versions of the Triffin dilemma. And so the initial version is more about the capital account. That was kind of the gold standard version of it, the Bretton Woods portion. But then when we transitioned to the petrodollar system in the 70s, after the Bretton Woods system broke down, then it became a current account problem. And so basically the way it currently works, yes, we essentially have to run a current account deficit in order to maintain it. And it's one of those things where the top 5 or 10% of Americans do very, very well under that system. So if you work in finance, healthcare, near DC, or healthcare, some of these kind of like more higher margin type of work, you can do very well because you're benefiting from higher incomes. You're benefiting from your currencies accepted around the world. You have a lot of purchasing power when you travel, when you consume, when you basically consume from the rest of the world. But if you are basically in the lower 2/3 of the income spectrum, especially if you're involved in anything that makes things and that basically would benefit from a different system, you're harmed by it because even though you have some of the benefits of it, you're also getting the full burden of the cost. And so that's this contributed to why the United States has a larger wealth concentration than most other developed countries. Why our politics can be somewhat polarized, why certain regions flourish and other ones became like the Rust Belt. A lot of this is tied into the structure. And so, I think some of the smartest analysts out there, like you've had Luke Gromen on your show, I think he does wonderful work in that area, showing that in many ways that the way that the system's currently structured is actually starting to cause more harm for more Americans than the benefits that are outweighing it. And so, this might have made sense decades ago, but in recent decades, it's really kind of been used against us in many ways. And so I think that there are some groups that are trying to defend the current system, whereas other groups are increasingly realizing that it's really, if anything, it's serving China a lot better than it's serving the United States.
Wow. All right. So then this gets really fascinating, which, raises the question, okay, so how is that power dynamic going to play out? Who's more likely to win? What does that sort of, back and forth look like as the two factions wrestle for control? I'll say the pessimist in me says that the people who kind of have all the power in the current system, I think, are the ones that benefit from it in the ways that you said. So I don't see them giving up that power lightly.